After you sit for a couple months with it at a loss, and it's hard to stare at, and you know, and then you realize, oh, there was no real reason I was invested in this other than I like it. Like, bad idea. Let's get out. So today I focus a lot more on diversification. How do I distribute my money across different things? I already have plenty of money. I just need to make sure I keep it safe and I don't lose it. Concentration versus diversification, you know, having more money than time versus time than money. My focus is helping people understand, learn how to invest in all these different alternative investments that I had to teach myself a couple years ago. I would see my account go up and down by hundreds of thousands of dollars every day. Just like how I approach investing is, you know, everything that Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. You know, I bought a ton of crypto, Bitcoin, Ethereum. I'm invested in a fund that's in the top 40 digital assets. How much money should I be putting in? What do I need to look out for in deals that I look for? How do I set my investment thesis? How do I determine what I want my investment to do? Do I want cash flow? Do I want tax benefits? Or do I want equity growth? Those are all questions I had to figure out and learn. I've realized after paying tens of thousands of dollars, I've been in a bunch of different groups. I've been in a bunch of different fund manager groups to learn how to set up funds and invest in funds. And no one really teaches you how to think about investing in the space. A lot of people like investing in the stock market and in equities. And if you're young, that's usually, I feel like that's common advice for people to invest in high growth equity. When you're 22, like all 30, 40-year-old people, like everyone wants to help the younger person. So in 2021, at the old age of 80, my dad passed away, just from old age, and it kind of flipped my whole life upside down. I became the patriarch of the family. All of us, I constantly ask myself the question is like, by being sad, how does that help me? Or by being angry, how does that help me? My Tesla stock turned from $100,000 to 1.5 million over a 10-year period. You know, I think anytime you deal with something for the first time, you're the most emotional. That was my first real lesson. You know, it's like when you start losing money, that's when you really learn. And from there, that's when I started thinking a lot more logically.
What are you afraid of? A lot of people express a fear of falling, a fear of heights, maybe even a fear of flying. We have a new take on that today at the Plain Success podcast. We're going to talk about the fear of money, chromatophobia. And our guest is going to help maybe those who have a fear of navigating the complexities of money and investing on how they can achieve financial success and use that success to power themselves to a life of purpose, happiness, and prosperity. Pascal Wagner is the CEO of Grow Your Cash Flow, and I am excited for him to teach us how to overcome the fear of money today. Pascal, welcome to the show.
Thank you, Alan. Incredible introduction. I loved it. Thank you.
You are an incredible person. So I have a question. Was there a tipping point in your life, a moment where you had to make a decision to make a change in how you were managing money, either for yourself or someone else? What was that, and what did it change?
Yeah, so the experience that comes to mind is one that happened to me over the last couple of years. So in 2021, at the old age of 80, my dad passed away, just from old age, and it kind of flipped my whole life upside down. I became the patriarch of the family. All of a sudden, needed to take care of my mom. My mom doesn't really know much about finance or investing or money management, and at the same time, I had a huge run up in my Tesla stock. My Tesla stock turned from $100,000 to 1.5 million over a 10-year period, and kind of that event made it just flipped my life upside down. It had to make me rethink, how do I invest in order to buy back my time and diversify my portfolio and income streams to not only provide me an income, but also to help my mom, like as a 65-year-old, live out the rest of her years in her retirement without needing to stress about money. So that was the last big event.
So I've found often a lot of times that the worst situations of our life sometimes are the exact thing that we need to take us to the best situation of our life. Losing a dad is an extremely difficult experience. I lost my dad 4 years ago, and that changed everything. Now, the first thing that it changed was just it was very difficult to deal with his death. And I would love to know, were you close with your dad, and what was the emotional impact of that? Yeah, we'll start with that, and then we'll move from there.
Yeah. Look, I think for anyone, it's incredibly difficult to lose someone close to you. For me, I think close to my dad is a relative term. I'd say I always looked up to him, and he was always, kind of the person whose approval I wanted when it came to anything that I did in my career. And, is probably one of the big reasons I got into investing. We would do a stock simulator portfolio. We would go back and forth, and I would share him the investments I was making, he'd give me feedback, and we did things like that helped kind of set my interest and start my career in investing. But yeah, I think for anyone that's going through something like that, I think I'm not the type of person that really labors on someone passing away. I kind of view it as, look, it's a part of life, and at some point my time is going to come too. I hope it's in a long time from now. But even if it happened tomorrow, like I'd rest in peace. I had an incredible life so far, and I think those who pass away don't want the rest of us to live sad for the rest of our lives. They would want us to celebrate their lives. And so that's how I choose to think about anyone, including my dad, who passed away close to me.
Pascal, what's the foundation of that confidence? That's not something that maybe there are a lot of people that have that, but what is the foundation of that confidence for you?
I don't know. I think it's I am generally an optimistic person, and I've put a lot of work into studying Stoicism and just thinking in terms of facts instead of emotion. And I constantly ask myself the question is like, by being sad, how does that help me? Or by being angry, how does that help me? And throughout my life, whether someone screwed me over, or I lost money in a bad deal or a partnership, or whatever it may be, I found that getting emotional about it often leads to worse outcomes. And so by being stable and thinking through it and being logical about it has helped me make better decisions, and I think ultimately it just has helped me be happier.
So I think that's really powerful, and it sounds like it was developed. Was your default setting growing up stoic and logical? Because it sounds like maybe there were some emotions that you had to overcome. So, and I don't know that version of Pascal, so I would love to know what that journey looked like.
Yeah, I don't think I can point to any specific period or looking back and saying I studied this. Like, have I read a couple books? Ego is the Enemy by Ryan Holiday. I've read. The classics are failing me right now, but I've read a couple of the classics, and I don't know. I think you just need to get burned enough times and realize that's not helpful. I think anytime you deal with something for the first time, you're the most emotional. And then the more that you deal or have a recurring problem or issue, it kind of stops phasing you. If I took an example of sales, if you have never done sales before or outbound sales, for example, I have a story where, I started doing outbound sales and I was shaking and, I would get really emotional about doing it. But after, 50, 60 calls, it's just another phone call, it takes all the emotion out of it. And I think having more and more instances of that has helped me. I don't think I'm totally over it. I don't think I'm totally over it, but I think it's something I work towards every day, right?
Well, and I would argue that maybe you're not supposed to be totally over it. I think that there's a really great place for being stoic and methodical and deliberate, and certainly investing is one of those places. But I think outside of that, emotion gives a lot of color and flavor to life, right? And so I think there has to be that balance. I can't imagine, I love to fly, and there's parts of flying that are certainly deliberate and methodical and checklist oriented, and that's what keeps you safe. But there's also just the experience of being up in the airplane and seeing the world unfold before you. And so when you started investing, were those emotional decisions? Did you have to learn to discipline yourself in investing? Take me through how you learned from emotional decisions in investing and how that has changed your philosophy on investing now. Because there's probably a
Yeah,
lot
I
of
mean,
people right now dealing with difficult emotions with investing because the stock market's all over the place, real estate's going crazy, people are scared. So I would love to know what that journey looked like for you.
yeah, I mean, I think that I've very clear examples of this. I can tell you that one of the very first investments. So I did this. I mentioned I did stock simulator with my dad, and after I kind of moved away from the simulator and started putting in real money, I invested $5,000 into Jamba Juice. I remember very, very distinctly. It was my first stock. And, why did I want to invest? It's like, it's a place when I was a teenager, I think I was like 19 at the time. It's a place I liked to go to. I liked their smoothies. They were around every corner. And, to me,
Yeah.
it was a very emotional decision. It was like, oh, I like this. And, I want a piece of this. I think it'll grow. And it was based on no fact, no rhyme, no reason, other than my emotions of how I felt about it.
You just thought Orange
And
Dream
lo and behold,
Machine was
that's
going to be Cash Machine, right?
yeah, yeah. I mean, when you know nothing about business, that's typically how it goes, right? So, that's how I lost my first, $1,000 when that stock tanked 20%. And I
Gosh.
started, that was my first real lesson. It's like when you start losing money, that's when you really learn. And from there, that's when I started thinking a lot more logically. I remember, the next big transition was investing in Tesla. I remember my dad sitting in front of the TV and his favorite show was I don't know if it was his favorite show, but he watched Jim Cramer on the TV pretty often. And if you know anything about Jim Cramer, he'll just tell you to buy or sell. And I mean, he's just some analyst that has publicity that people tend to follow. And uh, at that time, he was saying, "Oh, you should invest in Ford and GM and this new company Tesla. Like, it's so small, it's not going to do anything." And to me, being young, I was like, the EVs were slowly, electric vehicles were slowly starting to pop up, with, us talking about, oh, the future is going to be electric and cars are going to be electric in the future. And Tesla was the only company kind of tackling that at the time. And to me, it was like, hey, Dad, why would you invest in these companies when over a long time horizon, let's call it the next 10 years, that if you believe EVs are going to be electric, why would you not, if you think cars are going to be electric, why would you not invest in some EV companies? And, at that time, then you'd look at Ford and GM weren't even interested in investing in EVs, a dollar. And so to me, that kind of was my next foray and really helped set the stage for how I started thinking about investing and thinking at a much longer term and thinking with having a thesis or hypothesis about why I'm investing in something. So I'd say that's kind of how I got my start.
So you had a 20% loss in Jamba Juice. Did you cash out at that point? You're like, pull out, oh, it's coming down. I
Yeah.
pulled everything out. Okay. Was that
Yeah,
okay,
after
long
you
term?
sit for a couple months with it at a loss, and it's hard to stare at, and and then you realize, oh, there was no real reason I was invested in this other than I like it. Like, bad idea. Let's get out.
Did it ever come back? If you'd left your money there, would you have gotten it back?
Who knows? And I don't care. I mean, I think it's one of those first lessons of know why you are investing in something, write down the reason, and have it be a real hypothesis and thesis.
So what is your
I don't need
hypothesis
to look at
and
that.
thesis? What does your personal hypothesis and thesis look like? How do you make investment decisions now? And is that evolving? Is that remained pretty constant over the years? What does that look like?
Yeah, so I can tell you from a recent learning. I'm in the middle of putting together a workshop with a colleague, Christopher Nelson, about managing money and making investments once you kind of become a millionaire. Because I think when you first start investing, or at least this has been my experience, when you have 50K, 100K, there's the investing decisions that you make, depending on what your goals are, I think are very different in that stage than once you become a multimillionaire. When you're a beginner investor, you very much think about, hey, I have more time than money. And you also are probably in this phase where you're likely younger and you're trying to grow your equity, grow that money into a bigger sum as quickly as possible. And you do that through concentration, primarily, investing in, one or few things. And then you also, at least the route that I took is I started investing in active real estate. Most people, everyone says, go buy real estate, great investment. And that's how I got started, and I had more time than money. And so it was worth it for me to buy the real estate and put in the effort and um, get the extra percentage points of returns by managing it actively, because every dollar mattered so much more. Now, today, as a multimillionaire, the way that I approach investing is much different, right? So today I focus a lot more on diversification. How do I distribute my money across different things? I already have plenty of money. I just need to make sure I keep it safe and I don't lose it. And I'm not as risky about it. And I also have more capital to deploy. And so I think about it in different buckets. My personal strategy is, I maybe let's call it 80% of my money goes towards cash flowing investments, because my whole goal is to be able to support myself from cash flowing investments to have enough runway to build my next business. I have, more confidence in myself in building a business that could grow much bigger than investing my money and having my investments grow. That's my personal thesis, and that's how I've come around to that. And then the other, let's call it 20%, I put in high growth equity investments. So we're talking things that I think can 10x over 10 years. So Tesla, crypto, and the like. So, I think there's no rule book. There's no way. No one sits you down and says, "Hey, here's your wealth level. Here's how you should be investing." There's tons of financial advisors that will persuade you to, try and take, invest your money here because they're incentivized to do that. But, I think once you have more money than time, the thought of owning and managing a bunch of real estate, which I do right now. I have 12 single family homes that I've candidly thought about selling because they do take time and effort and focus away from me doing my main business. And so, I think those pieces change over time. Concentration versus diversification. Having more money than time versus time than money, and then also just, are you trying to grow your money, or are you trying to reduce your taxes, or are you trying to get cash flow, or are you trying to grow the money? There are those three things that you can do with it, with your investment, and that's when you have more money and more time, more money, those things come into the forefront, and so your investing strategy changes. At least it has for me.
So tell me about grow your cash flow. Who are the people that you're working with? Is this a savvy, sophisticated investor that just wants somebody else to manage their funds? Is this somebody the first time that's never invested anything and they're not really sure how to start? What is grow your cash flow? What's the purpose, and how are you helping people move from where they are to where you are?
I love it. So I'm going to kind of take a step back and start with the why. So when I sat in the passenger seat and watched my dad invest growing up, right? And he was always very open, and he invested in a bunch of different private investments, apartment buildings, funds, and syndications. And, a lot of them did not pan out well. And I only, later, after working in venture capital at a company called Techstars for multiple years and helping manage a fund there, I learned a lot about how institutions approach investing, and it is it's a very methodical approach of, like, how do I set an investment thesis, go find a bunch of deals that could meet it, have it filter across some sort of buy box or filtering criteria to narrow to my top ones that match my thesis and all of everything that I want out of it, and then let me go in and do due diligence, which is very different than how my dad and how most people approach this space, which is they see a deal, or they maybe get a deal in their inbox, and then they evaluate, do I want to be in this, and kind of approaching it backwards. So I've had that experience, and I also just realized how difficult it is to determine who you actually want to work with, who you can trust, and how to find that elusive passive income that everyone's after. So I, as an investor first, I've been looking for all of these types of deals in order to support myself and my mom. And I invest in every single deal myself. And then I enable investors to invest alongside me in those deals that, they might not have had access to before. So, like, for example, the first fund offering that I have allows someone to invest with $50,000 instead of $200,000 into this, billion-dollar institutional investment fund. And that's really where my focus is helping people understand, learn how to invest in all these different alternative investments that I had to teach myself a couple years ago. And just help people get a leg up. And, if some of the opportunities that I have are a great fit for their investment portfolio, great. If not, at least I can help educate on what to look for and what to look out for.
Awesome. So backing up there to maybe where you started, and I love the why. So again, if we have somebody, they've never invested before, maybe all they've ever done is invest in a mutual fund, right? They've taken their IRA or their 401k and they've given it to one of the big companies. There's a lot of them out there, Fidelity or Vanguard or whatever, and they buy into a mutual fund. How is that different than what you're doing? Because you say fund, and a lot of people are like, yeah, I have a mutual fund. Like, why would I move that money somewhere else? Can you explain that and some of the advantages or disadvantages that people would face doing that?
Right. So, I think everyone, let me take a step back. I think when you first start investing, the common knowledge is go invest in the stock market. Go invest in the stock market, buy stocks, buy index funds. Maybe you go buy a couple pieces of real estate, and that's kind of what people think of investing is. Once you reach a certain wealth status, once you become a millionaire, you, in the eyes of the U.S. government, are considered an accredited investor, which basically means that the government thinks that you're sophisticated enough to make investment decisions in private deals that require a little bit more sophistication and research than what's offered by the documentation on public companies in the stock market. So, when people are investing in these index funds or mutual funds, you're only invested in one aspect, but you're only invested in one area, right? Like, you are in the stock market, and if the economy goes through some sort of mishap, if there's a recession or depression or COVID happens, and you literally see, I would see my account go up and down by hundreds of thousands of dollars every day, and if you're like me, that's pretty hard to stomach when it's a good portion of your net worth. And you start to realize and think that, okay, there are other ways to invest. Having invested in real estate that's not correlated so closely to the stock market, you realize that there are different ways that you can hedge and diversify the money that you have, so that it's not going up and down all the time, and that you can, maybe if the stock market goes up, that the rest of your portfolio is only going up a little bit, or if the stock market goes down, that the rest of your portfolio is staying relatively stable. There's the difference of investing in on the stock market and off is they're totally different vehicles that if you're looking for different tax benefits or different, if you're looking for cash flow directly to your account, like, those are only, you can't get that from index funds or mutual funds on the stock market, at least not that I know of. And so I would say those are the main differences.
So backing up to what you had talked about earlier, making that investment in Tesla, what was the initial investment? Did that continue over time? And when did you realize, like, whoa, this is going to be like a life-changing thing? Not very many people, I think, get to have the experience of having an investment go. I've never had the experience of having an investment go from $100,000 to 1.5 million. And what are you looking at right now that you think has the potential to do that again?
Yeah, so I think so back then, what was it? I had flipped a bunch, not flipped. I bought several homes, and I was at a point where I had a bunch of cash flow and cash from investing in real estate, and I put $50,000 in, and then my dad matched me we created an account where, we were both on the name of the account, so that eventually, whenever he passes away, that I would inherit everything with whatever the value of the account was. I would inherit without needing to pay taxes on it. So my dad was very shrewd in setting up these accounts in these different ways in order to kind of set up that tax structure, which is ultimately what allowed me to sell without paying any taxes back in 2021. But he matched me. So I put in 50, he put in 50. And I'm going to tell you, just like when how I approach investing is, everything that Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. No one wanted to invest in electric vehicles back in 2010. Like, I sat there and I was like, okay, on a long enough time horizon, we're going to have electric vehicles. So I don't know when it's going to happen, but it's going to happen at some point. And right now, the price of this stock is incredibly low. So I bought it. And, for a good 6 to 8 years, if you look at Tesla stock, it's pretty flat. And it's only over the last several years that Tesla has finally had this massive spike and boom, and had this huge run up. And, it's not like for the last, the first 5 years, it's just kind of like, okay, I've made this investment. I still believe it's going to be a thing. It hasn't transpired yet. But that's usually how things happen. It's like they don't happen immediately. You have to wait a while, and then slowly, and then suddenly, some of these opportunities and blow up. And that's what happened in my case.
So you sit on this investment for a long time. It's not really going up, not really going down. Was there ever a point where you're like, I probably should put this money somewhere else? And if so, why did you leave it in? And then as it had that rapid rise, were you worried about it coming back down? What drove the sale of it? And if you hadn't sold, what kind of a difference might that have made?
Yeah, I mean, look, I think in terms of deciding when to sell it, I think every investor has that. If you look at your portfolio eventually and you're like, okay, do I still believe in this? What is the original thesis? I think that's why it's always important to write down why are you getting into an investment in the first place? And what is your hypothesis about what's going to happen? So for me, every time I looked at the investment, it's like, okay, well, do I still think EVs are the future? Yes. Do I know of any other companies that I think might be a better investment? No. Do I still believe in the founder and the company that's growing at Tesla? Yes. Okay. Like I don't, there's nothing to change here. In terms of selling and deciding when to sell, I think when you have a stock blow up like that, it really depends on your financial situation and how much it makes up of your net worth, right? At that time, that pretty much made up most of my net worth. I'm going to say like 80%. And so, when your account and your net worth is going up and down, like I said, by hundreds of thousands of dollars a day, and especially as a volatile stock as Tesla, yeah, I mean, that was when, when I had the whole blow up of everything happened, my dad passing away, and I had this unique, I guess, opportunity where I needed to reallocate things. That made sense at that point in time to do, because I just had a life event where I needed to rethink about how I'm going to manage the portfolio for my entire family. But you asked earlier about what are the opportunities where I think that might be today, and I would say the one that I'm most bullish on is cryptocurrencies. I've been invested in cryptocurrencies since 2017, I believe. I bought a ton of crypto, Bitcoin, Ethereum. I'm invested in a fund that's in the top 40 digital assets. And, there, my investment's already tripled. And I think we're still very early innings in that. But now, that makes up a much smaller percentage of my net worth. So let's call it 15, 20% of my net worth, now that everything's doubled or tripled, is in crypto. And, it's a smaller portion of my net worth, and I want that to continue to ride. I have my cash flow needs met. I have, my path right now where I have investments in a bunch of different things, and I don't need to touch that money. And even if I lost it, like it wouldn't make a huge impact on my life. And so those are the types of investments now that I want to have let ride for the next 10, 20 years.
Awesome. So tell me more about Grow Your Cash Flow. Is that coaching? It's investing with you? Walk me through who you're looking for and what can somebody expect if they're reaching out to you?
Yeah. Look, so my whole thesis with Grow Your Cash Flow is to help investors like me 3 years ago. If you have been invested in the stock market and you want to diversify, you're looking for other investments, you don't know what else to invest in, you maybe want investments in real estate, or you want cash flowing things, by joining my email list, I teach you everything that I've learned and picked up along the way that I wish someone would have taught me. How do you think about investing in funds versus syndications? How much money should I be putting in? What do I need to look out for in deals that I look for? How do I set my investment thesis? How do I determine what I want my investment to do? Do I want cash flow? Do I want tax benefits? Or do I want equity growth? Those are all questions I had to figure out and learn how to answer for myself. And I've realized after paying tens of thousands of dollars, I've been in a bunch of different groups. I've been in a bunch of different fund manager groups to learn how to set up funds and invest in funds. And no one really teaches you how to think about investing in this space. So, I think if someone gets into my community, joins my email list, that's what they should expect. They should expect to learn. It's someone who's maybe done less than 10 private investments and wants to learn more about how this market and this game is played. And then ultimately, if some of the investments that I have, right now I have one opportunity, which is a debt fund where you can get paid monthly distributions from that fund. If they're a good fit, great. If not, if you're on my investor list, I have 5 to 10 different deals that I look at every single week. That's part of my deal flow that I share with everyone on my list. So really, if you're interested in alternative investments, it's a way where you can learn and get more information about how to invest in this space and do it the right way.
It sounds like that is kind of a medium experienced investor. They're not so sophisticated they want to do it all on their own, or maybe they just don't have time to do it on their own, but maybe they're kind of tired of the stock market. What about the guy that's like early 20s? He's just out of high school or college. Maybe it's somebody that's come out of the military and they're just trying to figure out, how do I go from where I'm at right now to get to the next level where there's a little bit of financial success, a little bit of traction. Sounds like you started with real estate. There's people right now that are saying, oh, you can't make money doing that in real estate right now. Prices are too high. Interest rates are too high. What would you say to that person who's just looking around and going, how do I get started doing this?
Look, I think yeah, I mean, it's a good question. I don't think I'm in the nature of giving financial advice like that, right? Without anyone's knowing anyone's specific situation. And I'm also not licensed to do that. But what I can tell you is what's who I help and what's worked for me. I think generally when it comes to investing in these types of funds and what we call alternative or private investments, it's generally reserved for people who are wealthier. I would say $1 million plus and above. There are a lot of platforms that have come out, like Realty Mogul, Yield Street, Fundrise, where the average, unaccredited investor, or someone who's just starting out, maybe you even only have $1,000 to your name, you can go invest in these different investments and opportunities. And I think it's really, I don't think I can really offer any advice to the younger person. I think everyone has to figure out their own path. A lot of people like investing in the stock market and in equities. And if you're young, that's usually, I feel like that's common advice for people to invest in high growth equity investments when they're young, because, you have the most time to make up any losses, and you also have a lot of time in order for those investments to grow. And, uh, for me personally on my journey, I've been 50-50. I've been like a half stock market investor and half cash flow investor, where I've been investing in real estate on the side and wanting that cash flow. There is no blueprint or playbook. No one's going to sit you down and tell you, hey, here's how you should be investing. And investing is also very personal. It's based on your risk tolerance, what types of things you want to invest in. Do you want to invest in greens and renewables, or do you just care about, the highest returns? And so you're willing to invest in oil and gas, or, are you investing for cash flow, or are you trying to grow your net worth the most? I think what's hard about when you're younger and you don't have as much money is that no one sits you down and really teaches you these things.
So what can you do to educate yourself in that position? Is that reading books? Is it going to meetups? Is it, hey, just make a start and go and buy a house to live in, because that house is going to gain equity and it's better than renting? Do you house hack with some buddies? What's just an actionable step? Not necessarily, here's what Pascal would do, but what did Pascal do when he was in that position and you just had to get started? Now, you had a dad that was teaching you about investing. My dad never taught me anything about investing in the stock market or anything else for that matter.
Yeah, I mean, look, I think the first thing I do in anything that I want to do is go find someone who's had the success that I want to achieve. Anytime I've tried to recreate the wheel from scratch, I didn't have a mentor, someone guiding me along the way, I would spin my wheels and burn out. Like, to me, I want to follow a tried and true path that multiple people have done, where it doesn't require Superman to get success, and then finding that mentor and doing exactly what they tell you to do in whatever area that interests you. One of the first books that was influential for me was Rich Dad Poor Dad. Learned a lot about cash flow investing, and I think that's what really set me on the path for investing for cash flow. And how did I get started? I partnered with someone who already bought a bunch of homes and was cash flowing in real estate. I partnered with my best friend Diego. He already had bought a home and was already cash flowing with it. And so, it didn't need to be someone old. Diego was my best friend. He was also my age when we were, in our 20s. He was just a couple steps ahead of where I was, and had this success at this age that I wanted to have. And so I did what he told me to do, and I think the same applies for if you're in that boat now. If I occasionally mentor students at Florida State University, and the questions come up there that are like, hey, I want to go do biotech, or I want to go start I want to go serve this customer. It's like, okay, well, go go work in that business. Go find a mentor who's done that. Go talk to the CEO of someone who runs the same type of business. When you're 22, like all 30, 40-year-old people, like everyone wants to help the younger person. And so that's a lot of what I did. I got a lot of scholarships to go to different conferences. I probably went to 12 different conferences, free and clear, paid, because I won some sort of scholarship, or they might not have even had a scholarship available. And I like messaged the person who ran the event and was like, hey, can I volunteer? I just want to be in the room. I want to learn from people about how this is done. So I think the first step is it's finding a mentor, someone who will lay out the path for you, and then it's just a matter of doing the execution.
How important is mentorship for you now? Does that ever change? Like, it's important when you get started out, but does that continue to be true as you advance and progress?
I mean, I would ask you. I think for me, it's it never. I mean, I'm constantly looking for mentors. I've tons of different coaches. I have mentors. Like everything that I'm trying to do, I haven't done before. So why try and reinvent? Like there's someone who's, I run a fund right now. I have 20 different fund mentors, people that have raised significantly more money than I have. And I'm constantly asking them questions. How did you solve this problem? How did you do that? How did you, who was your attorney? Who was your tax broker? Whatever, like, how about you? I mean, I think that never ends. As long as you're growing, I'm always seeking mentorship.
Yeah, I think no matter what phase of life you're in, you're really cheating yourself if you're not looking for somebody that's standing on a stair that's just a little bit higher than where you are and reaching out and asking for help. And maybe you have, but I've never had the experience of going to that person and having them say, no, I'm not interested in showing you how I did this. I think that anybody that believes that somebody that's had some success is going to be unwilling to show them the way is mistaken. My experience has been the exact opposite. And that's been true in every phase of life. It's been true in physical health. It's been true in financial health. It's been true in aviation. Hey, I need to learn how to fly this new airplane because I'd really like to fly something that's faster, more capable. There's going to be a guy that's put in 1,000, 2,000, 3,000 hours that is just super excited that somebody else wants to do the same thing, is going to show them how to do it. In fact, last night I was meeting with a group of mentors, 3 guys that I've met with every week for the last year and a half. And we were discussing what changes have we seen over that last year and a half. And I commented to my wife that, the guy that, for me, that they were describing who I was a year and a half ago is not even someone I recognize anymore, because there's been such profound change. And that's been in my health, that's been in my income, that's been in how I'm investing, that's in the people that I'm hanging out with, that's in the opportunities that I'm like, it touches every part of my life. And so I love that you mentioned mentorship as being one of the first steps, because it is such a huge life hack, to receive that advice, to follow it, and then you're all of a sudden you look up one day and you're in a position to give advice, right?
Yeah, I mean, I would maybe challenge you a little bit on there. I mean, I've had people that I've reached out to that didn't want to mentor me or give me advice, and I think I would be cautious to say that people won't reject you. I think I would go in saying people will reject you, but I think there are enough people out there that are willing to help you if you ask 20, 30, 40 people. I think when it comes to mentorship, also, when I was in my 20s, this word mentor, it felt like, oh, I need one person that's a mentor, and like I'm gonna call them my mentor, and we're gonna have a mentor-mentee relationship, and like they're gonna know I'm their mentee. It's not like that. It's like I use the term mentor very loosely, and I think it's healthy to think about that as well. Like I have mentors who I used to think that they had to be this person that was perfect in everything of how I wanted to be. Whereas I now more focus on, hey, you are a rock star in playing the guitar. Last summer, during COVID, I picked up guitar, and I had a guitar teacher, i.e., a mentor. And it's not like I wanted to grow up and be like my guitar teacher, but the guitar teacher was my mentor in that one way that they were better at than me. And so, same thing in fitness. Like I go work with a personal trainer or someone that's, more physically fit than I am, and they are my mentor in that domain or that area. So I think I would add those two caveats to what you said. And just, I think the little reframe helps reshape how at least I think about mentorship that might be helpful to your audience.
Yeah, I think that's a great clarification. And I would agree with you that maybe not everyone is going to engage in a one-on-one relationship. I think what I was referring to is most people have given me something, but the most valuable mentoring I've received is just what you described. It's like, hey, I see that guy succeeding in that way. How can I learn from him? And I think a great question to ask is, what can I give that he needs or she needs to help them get something that they want in return? And that maybe has been one of the most powerful learning experiences over the last few years, is as I've had the opportunity to be involved with people that are succeeding in a lot of different ways. It can be easy to go into that situation and feel like I'm the only idiot in the room that isn't succeeding. And then you have to look inside and find a gift that you have. I may not have the investing experience that Pascal has, but I do have unique gifts, talents, and abilities that can be beneficial to somebody in that room. I can offer a piece of advice. I can share an experience. I can be vulnerable with somebody. I can give hope. If nothing else, I can fly an airplane and invite somebody to come flying with me and fulfill what might be a childhood dream for some people, right? And that is a gift that I can give. And what I've found is that as I am really interested in giving the gifts that I have to others, people become really interested in giving gifts back. And in that mutual exchange, we both grow and become better. Has that been your experience as well?
I think there's two thoughts that come to this. The first is the worst thing you can do is go to a mentor, ask for advice, and not follow it. I think there is some sort of, grain of salt. Is you don't, just because someone tells you something doesn't mean you should go do it. You do need to think a little bit about, okay, does this advice they're giving me, does this make sense? Does this align with where I'm trying to go? But the more, every mentor that I've had, and I think about the people that I mentor, it's if they ask for advice and I give it to them, and then they show up 2 weeks later and they say, hey, I did exactly what you said. Here's what I did. And here were the results, X, Y, and Z. What should I do next? Like you've got that mentor hook to keep giving you advice. Like mentors just want to help people that take their advice. But if they don't take their advice, that's how you lose them. I think that's a gift in and of itself enough if you're going down that route. I do agree that, in the instances where you're looking for a mentor and, they might be that they might seem unreachable, or, they say no the first time. The way I've approached that is by saying, look, like, I'm here to work for you for free. Like, you tell me what you need to do, I'll go grab coffee. That's how I got actually into GoBundance and the organization we're both in. It's like I wanted to be surrounded by millionaires who I considered mentors, and I was 24, and I went and volunteered, and I got people. I would wake up at 4 a.m. I would help prep for the conferences. I would go grab coffee for people. I would go pick up people from the airport. People would give me their credit card. Like, people were going to go skiing for the day and they would give me their credit card. I would go to Best Buy, buy them a GoPro, come back, give them the GoPro and the credit card back. And like, I was just at everyone's service. And I think that's how you break down the wall for people to want to work with you. Is like, if at first they say no, like, show them how serious you are. And to me, the way I do that is by being of service and providing value for free. So that's how I kind of take what you've talked about. Do you resonate with that?
Yeah, 100%. I think we've had different experiences in that way, but I think the result is the same. I think what you were seeing is, maybe I don't have advice to offer, but what I do have is hustle, right? So I'm going to give hustle, and I'm just going to do whatever it takes. I think you displayed grit and tenacity in doing that, and a willingness to, I think, just take action, right? Like, you could have just sat on the sidelines and been, well, I don't fit in that room yet. Someday when I get there, I can do it. Instead, it was, okay, well, I may not fit there right now, but these guys still need X, Y, and Z thing. And if I can fill that need at some point, I'm going to be in the room, right? I think that's another lesson that we can take away is you have to at some point take action. At some point, the evaluation has to stop and the action has to start, and to gain traction towards whatever you're trying to do. Because you can read all the books in the world, you can talk to all the mentors you want to talk to, but at some point you're going to have to set aside the fear that you have and just take a step. And sometimes you're going to fail, you're going to fall on your face and it's going to hurt, but you're always going to learn from those experiences. You learned a great lesson from Jamba Juice. You didn't make any money doing it. It didn't turn out the way that you wanted it to, but it sure informed how you've made investment decisions moving forward. And so there's a lot of ways you could look at that and say that was the most profitable investment you ever made, not monetarily, but intellectually, that was a huge gain for you.
Totally. I mean, the first cuts are always the hardest.
Absolutely. My grandfather always used to tell me, measure twice and cut once. Maybe with a second measuring on Jamba Juice, it would have been a different cut that you made. But in the long run, I think we learn so much from the mistakes that we make. And those mistakes open up opportunities for improvement and growth that we wouldn't have experienced otherwise. And so maybe that's another lesson, is just don't be afraid to make a mistake, right? Do everything you can, do your due diligence. Maybe you're not acting emotionally, you're acting rationally, but be willing to take some action, knowing that probably 9 times out of 10, you're going to succeed. That one time is going to hurt, and you'll learn from it and grow and get better. Pascal, if people want to invest with you, learn from you, if they want you to mentor them, how do they get in touch with you? And what advice would you give them as they're selecting a mentor? Why should they come to you?
Look, I think, to answer the last question first, why should someone come to me? I don't know what, the listeners' experiences, where they're at in their journey. What I would say is that if investing in alternatives is something that's interesting to you, you should be trying to follow as many people as you can in the space that you think are knowledgeable in it. If you think that I am knowledgeable in it and you like how I think and how I approach it, then I might be a good person to follow. There are tons of other people out there that do this too, and there are investment firms that you can follow. I think it's a matter of finding people that you align with and that you want to adopt more of their thinking. So I think that's point one. I would say you should be finding many different people and taking in different perspectives, synthesizing them, and coming up with your own, and think critically about how you want to go about investing. It's probably one of the once you start to earn money and you need to start managing money, it's one of the most important skills if you want to become financially free. So I'd highly encourage you to follow many people on the topic. I think in terms of reaching out to me or learning more, if you'd like to learn more about alternative investing tips, all that kind of stuff, you can join my email list at growyourcashflow.io. And you can get access to all the deals that I have. You can see the investments that I'm personally invested in that you can invest alongside. And I also provide tips and tricks to everyone in my email. But you can also find me on every single social media platform, LinkedIn, TikTok, Instagram, Facebook, YouTube. I'm on all of them. And I'd probably say I'm most active on LinkedIn. So if you like what you heard here, reach out to me there and let's start a conversation.
Awesome. Pascal, the last thing I want to ask you is my dad always would tell me, Alan, remember the little things. In fact, it was something that he said so frequently that that's what's on his headstone now is remember the little things. Is there one little thing that you feel like has been the biggest contributor to your success that you would like to share with people as we close?
I wanted to mention this a little earlier, so I'll use this point here, which is I'm also trying to rewire my brain to this mindset, which is regardless of what you do or what I do, it's likely going to be wrong. But by having many at bats and learning as quickly as I can, I will get to my goal much faster. Einstein says, I've learned 1,000 ways a light bulb doesn't work, and then he finally found one. I mean, that's what life is. It's trying, and you learn, and you figure out what doesn't work, and then you do something else, and you get a step closer. And I don't think that ever changes. I'm in that journey. We're all in that journey, and I think that's been my biggest part of my success is that I just haven't quit and I keep trying. And I would encourage your listeners to be on that same journey as well.
Awesome. I love it. Don't quit and keep trying. This has been the Plain Success Podcast with Pascal Wagner, and I'm your host, Alan Underwood. Here's one investment that you can make today that will have a life-changing impact on someone that you love or someone who is in dire need of medical care far from home. Angel Flight West and our dedicated pilot volunteers and staff provide free medical transportation for those in need of life-saving or life-continuing medical care far from home. We solve the challenges of how to get the care and how to pay for the care. If you or someone that you know is struggling with a difficult medical problem that requires you to travel far from home, please invest the time and energy that it will take to look up angelflightwest.org. We want to be a solution for the challenge that you're having right now. angelflightwest.org.